Today I'm going to be talking about why the stock market is suddenly freaking out over the past week or so, and how this could mean a great opportunity for you to buy a lot of the stocks at a steep discount. Now, what has actually happened to the stock market? For the past week from the 1st of August, over the 4-day period to the 5th of August, the stock market had a significant drop of around 8% for the S&P 500. Now, what has actually contributed to this significant drop? This is one of the most significant drops over a 3-4 day period over the past couple of years. And it almost feels like it just suddenly came out of nowhere. So what exactly happened? Now, the first thing that we're going to look at are the fear of recessions. Now, the fear of recessions is not exactly anything new. There's been a fear of recession probably over the past 2 years or so. On Friday, the Bureau of Labor Statistics in the US have mentioned that the US economy just added 114,000 jobs last month, and unemployment rose to 4.3%. Now, this may seem like a good number, but it is actually significantly lower than the 175,000 that the economists were expecting, according to the forecast. And the unemployment rate was forecasted to be around 4.1%. So it had a slightly higher unemployment rate than was previously forecasted. The fear of recession is still pretty high, with some economists raising the odds of recession to 1 in 4 within the next 12 months. Now, again, they've been saying now we're going to have a recession for the last 2 years or so. So this particular forecast is just another, forecast. The second major factor is the Fed concerns. So what are the Fed concerns? The Fed concerns basically implies that the Fed did not actually cut their interest rates as many investors had hoped for last week. Now, a lot of the investors have actually priced in a rate cut by the Federal Reserve by September of this year. And they have mentioned that the Fed is notoriously horrible at timing its rate cuts and hikes. Many of them feel that they've been behind in trying to curb the inflation. The next possible reason for this significant drop-off in the markets over the past week is that the tech stocks are a victim of high expectations. And what does that even mean? Many of the tech stocks have been believed to be completely overbought at this particular moment. Now, these tech stocks include Amazon, Apple, Nvidia, which were among the best performers over this year. And there's believed to be a significant amount of profit taking over the past week or so, with Nvidia specifically, whose chips powers many of the artificial intelligence computational powers, has lost more than 20% since the 31st of July. Many people believe that the tech sector is overdue for a correction. Many believe that this stock market crash wasn't going to be one of the big ones, and there'll be more stock market crash or drop-offs coming soon. So what exactly should investors do here? So it's quite important to realize that stock downturns are a very normal part of the stock market life cycle. So drops of 5% or more have happened at least once a year for the past 4 decades. So stock market drops of 5% or more are an incredibly common occurrence when it comes to the stock market. Market corrections or a drop of at least 10% from the highs happen on average one every 1.5 to 2 years. So again, you're pretty much expecting a drop in the market of at least 10% of 1 to 2 years. So having a drop of 10% again is an extremely common occurrence. Even when you have bear markets, when the stocks decline by at least 20% from the peak, are a relatively normal occurrence and aren't a real reason to panic. So how can we factor all of that kind of knowledge into our buying strategy for the particular stocks? Now, I would look at VOO, which is the Vanguard S&P 500 ETF, as an example. So what I will do here is I will take a look at what the previous high. And by this case, I mean the previous all-time high that we have, which is from the 16th of July. And I would look for around a 10% drop from the all-time high. So 15th July, the VOO Vanguard S&P 500 was at $520 per share of the ETF. So 10% drop from that will be around $467 per share of ETF, which means that essentially you're going to pretty much be looking at a buying range of around $467 to around $470 per share for the VOO Vanguard S&P 500, which coincides with the 10% drop. So basically you're looking at the 10% drop and setting up a potential buying opportunity around that region. And that is going to be my personal buying strategy if the stock drops even more. So currently there's been a rebound from the market. If the stock drops even more, we might be looking at a drop to around the 20% mark. And that is another opportunity to buy even more stocks. Okay, so what I'm going to be looking at is the 470 region for the VOO S&P 500 ETF. Now, again, this is just my personal strategy. It doesn't have to be your strategy. And this is not financial advice because I am only doing this for myself. You are completely free to do whatever you want to do. Let's look at another very popular stock, which is Nvidia. Now, if we look at the highs that they have back in June, which is around $140 per share. So Nvidia has a much more significant drop from its all-time high. So it pretty much dropped around $50 per share from its all-time high and of around 35%. So for Nvidia, I would almost look for an even more significant discount for Nvidia if I want to invest in the Nvidia stock. I would either go for the $85 mark, which signifies around a 40% drop, or even around the $80 mark for buying Nvidia, which signifies around a 43% drop. Market corrections happen at least once a year, or roughly a little bit more than once a year. So you really have to basically just look at these opportunities as they come. And if you hold on to good companies, or if you are investing in funds like the S&P 500, for the S&P 500, my strategy is to basically hold on to it for the long term. I am not particularly interested in buying in and out of the S&P 500. So basically, I'm constantly just looking for buying opportunities for the S&P 500. I'm not really looking to sell in the short term and then buy in, because for me, trying to time the short-term market is really a very difficult thing to do. So basically, I would set up my buying prices and look for when the market approaches those buying prices. Again, with the S&P 500, I can even look for a more significant drop. Maybe even around the 20% drop mark. Now, 20% drop from the all-time high is going to be around $415 mark. Now, would I really expect this current market correction to go that far? Probably not. So I probably would look for the $470 to $460 region if I were to buy on a discount. Now, of course, I still have my usual weekly or monthly investments into the S&P 500, but this is just an opportunity for you to pick up some extra stock at a significant discount. Now, don't worry too much about the news itself and all the doom and gloom that's been going around, and just take this opportunity to pick up good quality stocks at a significant discount.